Hello and welcome everybody to our Where Artificial Intelligence Investing is Headed webinar. I'm your moderator, Tom Cohn, Cerity Partners Chief Solutions Officer, and here with three of my colleagues to tackle what perhaps is the most interesting and impactful investment story of 2024 and 2025, and that is artificial intelligence. Ever since we learned what ChatGPT meant, we've all been obsessed with figuring out how artificial intelligence impacts our daily lives, including workflows at our jobs, as well as thinking about what it means for investing into the public and private markets. So today, we're going to have the hard job of tackling a couple of important questions and topics, starting with how is artificial intelligence impacting the financial landscape, both in the public and the private markets? How is the regulatory regimes in the US, Europe, and Asia impacting those decisions around investments? What does the announcement of DeepSeek that came out earlier this year mean for the arms race within artificial intelligence? And finally, what are the industries and sectors that have been most impacted today by artificial intelligence? And perhaps which of those sectors and industries will be the most impacted over the next couple of years? So I am lucky enough to be joined by my three colleagues here. I'll start with Mike Devlin. Mike is a partner and a member of the Cerity Partners venture team. He specializes in early stage and growth companies, including companies in enterprise SaaS and AI. Thank you, Mike, for being here.
Absolutely. Thank you for having me, Tom.
Also joined by Justin Dumichel. Justin is a partner and practice leader in our Boston office. In addition to servicing clients, he serves on our Cerity Partners Wealth Management Investment Committee and is a co-leader of our internal equity management program. Thank you, Justin, for attending.
Thanks for having me.
And finally, Ned Frazier is a senior principal in our Denver office. He's a senior leader on our investment team and co-leads our private market research, including research of private venture capital funds. Thanks, Ned, for attending.
It's great to be here.
All right. So we've set a hard task and a number of topics to address here today. I think I'll start with you, Justin, on the public market side. Just asking at a high level, what are we seeing in terms of AI and its impact on the public markets?
So I'd say that there's a number of different cross currents there in the public markets. Obviously, there's been incredible gains and profits made in the likes of NVIDIA and the hyperscalers in terms of Microsoft and Meta and Google and Amazon in terms of building out data center capacity and launching the infrastructure back end to support AI. That's been going on for the last several years and continues at a strong clip with incredible amounts of capital being invested. The way that it continues to broaden out is what I think is the most interesting thing over the last few months and few years in terms of expanding into now some software applications that are capitalizing on it. There's some interesting applications in terms of the power and energy markets where utilities were an exceptional winner last year as you started to look at the impacts on the grid. So this is a very big topic that's going to continue to garner attention as you've had amazing amounts of capital that needs to be justified, and just the infrastructure that's being deployed needs to be supported.
Great. Maybe turning to the private markets, I'll start with you, Mike. You spend your day looking at private companies. What are you seeing in terms of the impact that AI and the companies that you're looking at?
I would say first and foremost, AI is making it easier than ever to build new solutions, new software applications, and new companies. It has really lowered the bar to being able to create something great and impactful and add value. And so as a result, we're seeing a ton of capital be poured into this space with startups being built, unlocking new opportunities, new data sets, creating new use cases, creating entirely new businesses. So really it's the lowering of that kind of bar and those barriers to building new companies, new software, new solutions.
Nat, you're spending your days talking to venture capital firms. What are you hearing from our partners on the venture capital side?
Certainly, one of the ongoing trends in VC deployment into AI startups is the ongoing abstraction of layers of the AI tech stack. And abstraction is a fancy word, but it basically means that you don't understand how something works. It just has to work. We've seen abstraction throughout technology shifts. To run enterprise software 25 years ago, you used to have to stand up your own server room and host a application on site. Amazon Web Services abstracted that need, and you don't necessarily have to know how their servers work, what's going on in their data centers. It just works. And we're seeing that with LLMs today and people building applications on top of existing models. And so there's increased focus on applications that are taking advantage of the open AIs and the perplexities of the world, but that might be actually agnostic to those underlying LLMs.
Great perspective. Perhaps the biggest announcement was DeepSeek's launch of its open model, which seemingly shocked the investment world earlier this year. I'm curious for each one of you how that announcement has changed our viewpoints on AI and specifically the arms race or the deployment of significant capital that we saw over the last 2 years.
Based on the incremental size and scale of each of these Mag 7 stocks and the importance in the industry, we obviously are focused on the impact there to begin with as public market investors. And so starting with NVIDIA, the question that immediately emerged is, do we need as many GPUs to build the AI of the future? There's been a lot of question that's been brought to bear as to whether the legitimacy of where the DeepSeek models were built in terms of what they potentially started with, what they grew on. But most importantly, I think what's come out as everybody's digested it is that this just is unlocking an amazing amount of potential. And there's likely going to be even more compute needed as this allows for more and more applications to start using AI in a more specific way and to build on these base models, whether they're open or closed. It doesn't really matter. It matters that there's abilities to, as we just talked about, focus on applications. What are you doing with this? And I think there's an argument that we're going to see kind of a public-private cloud type of pattern emerge in AI, where there's going to be these broad, democratized models, and then there's going to be very specialized ones that are going to be much more proprietary, much more closed loop, and that's going to be a good thing for us. And it feels like as a society, we're very much application driven. No matter how much we try to generalize things, we like it in a very specific way.
Very helpful perspective, Justin. Mike and Nat, what about the impact in the private markets?
I think the thing that we saw and really kind of what we took from the DeepSeek model that was built, how it was built, how much it cost to build, is that it's continuing this democratization of these large language models. This is going to become more and more affordable and easier for people to access. You can already see so many of these startups that are building at the application layer, like Nat mentioned, that are building with a model routing component. There's no kind of loyalty to one model anymore in terms of building it. You're rotating to the one that's performing the best for each and every use case. And so we're going to see that continue to happen. DeepSeek is kind of a validation that this is going to be happening around the world, and the US won't necessarily be the only ones pushing the bounds of this technology.
The resources at DeepSeek's disposal in building their R1 model, and it's suspected that they probably imported chips around the export ban in some of the development, but they didn't have the full use of the most advanced chips that other model providers have had. And I think this is another historic example of necessity being the mother of invention. And there were some technological breakthroughs that DeepSeek implemented that can be emulated by other model companies. I think the foremost being this mixture of experts approach. And so if you think of an OpenAI as being an all-knowing professor at a university tasked with answering any student's questions, that would be your monolithic LLM, whereas DeepSeek has an army of graduate TAs whose domain expertise is far more limited, but can be called on individually and not necessarily paid simultaneously. And so if you think about the token use of a model and having this mini models that can be called upon when needed in the DeepSeek approach, it's created efficiencies that, again, I think we'll see become more widespread. And so as the model layer becomes further commoditized, it's really creating a lifts all boat phenomena across AI builders, AI tools, AI applications, and I think is going to create increased demand and usage going forward.
We've talked a lot about the fundamentals or the models themselves and perhaps where the industry is headed. But let's take a step back and think about valuations. A lot has been made about the valuations because of the interest level within artificial intelligence, both in public and private markets. Maybe we'll start here on the private markets. How should we think about valuations within the private markets now?
They're high. They're certainly high. Any AI startup will get some sort of premium versus a non-AI enabled or non-AI competitor. I think at the large language model part of the market, that's where we're seeing the highest valuations, OpenAI, of course, being one example. I think the question on that topic is whether or not the cutting edge research that these frontier models are creating will find use cases for an AI that might have a 200 plus IQ equivalent versus a far cheaper version of 120 IQ AI tool. And at what point does that market get so small to have the absolute latest, greatest cutting edge AI model? And so what I've heard from many investors in the space is that new investment in LLMs will probably be mixed in terms of the investment returns, and that the real focus today is on those applications.
Jason, what about in the public markets? Can you compare and contrast that with what we're seeing in the private markets?
Public markets feel like there's been a bit more doubt put in it. There's a little more reality in terms of the actual earnings being here today instead of betting on the future. And interestingly enough, as we sit here today, NVIDIA on a forward earnings basis is trading at 24 times earnings, which is well below its 5-year average on a PE multiple. Obviously, the exceptional growth, it is likely that they're getting closer to the peak in their earnings than to a trough. It is a cyclical semiconductor business historically, as much as people would like this not to be the case. We will not just buy endless amounts of semiconductors at higher and higher levels at higher and higher prices, and competition will emerge. But the fact is that the valuations haven't become too excessive the way that they had in the dot-com bubble.
We wrestled in the late 90s around we have the proper methodology to value internet companies, and were valuation metrics and fundamentals behind what was ultimately a game-changing technology in the internet. How difficult is it to think about valuing companies, whether they're actual AI companies or companies that are employing AI in their workflows?
Yeah, to take this very much to the company level and the startup level, it's very difficult. Right now, the technology is moving at such a pace, even if you think you had a competitive advantage or a moat, it's disappearing relatively rapidly, especially considering some of the incumbent players and how much they are innovating and pushing, which hasn't necessarily been the case over the past 10 to 15 years in these spaces. And so what you are seeing is different versions of moats, baking in that subject matter expertise into these niche spaces and building, information and data moats that may not be there in some of those specialized use cases. One of the, I think, most impactful pieces of the broader LLMs is the ability to unlock new data sets. We're having access to data at scale that we didn't previously because technology just wasn't capable of extracting that information, understanding it, interpreting it, and doing it at the scale that it is now. And with that, you're going to have just a whole bunch of different solutions, a whole bunch of different use cases to be able to tackle. But that has to be different than the technology, because the arms race in this technology space is really moving so quickly. It's very difficult to evaluate whether that's going to be your long-term advantage or it's going to be that kind of specialized subject matter expertise or underlying data.
Not have a conversation about AI without talking about geopolitics. Over the past couple of weeks, we keep talking about the Trump administration's tariff policy as it relates to Mexico and Canada specifically. But let's turn back the clock and talk about trade policy with China, specifically the export restrictions on semiconductors. I'm curious how this is shaping our viewpoints as it relates to AI and what this means for the development of technology within the US and also within China.
So it's something we have to consider. It's an important factor on both sides. And in terms of wanting to have our businesses have unbridled ability to grow globally, this reduces that. And personally, I don't think it's a great thing other than to protect our national security. There's reasons why you need to have some restrictions in place, but generally, we believe that it's best for our technology companies to be able to do business globally. And that's what will be best for the earnings and the revenue that we're looking for to value them. So as we talk about what will restrict a future appreciation in the underlying from a valuation perspective, what we're willing to buy stocks at what prices, if you're removing key markets, that's problematic for that. And it's probably going to limit innovation to some extent, because the free flowing of technology between countries is a good thing. DeepSeek is not a bad thing for us from a competitive perspective. It's innovating the AI ecosystem. It's a good thing for us to be able to then access and innovate off of.
Nat, what are your views on the impact of export restrictions?
I think export restrictions are part of it. And we talked a little bit about how those export restrictions created a necessity as the mother of invention dynamic within China, which probably led to some great breakthroughs in terms of AI technology and architecture, as we saw with DeepSeek. I think that's only part of the geopolitical question, though. You have to look at different regimes and their focus on AI safety. You have to look at the value they put on personal data and privacy. Obviously, in China, the value of personal data is very different than in the US. I think the large incumbents in any market will have a tendency to try to capture the regulatory body, this regulatory capture phenomena. I think we're seeing play out. And so smart policies will need to balance maybe some common sense guardrails on how they regulate AI. But there is certainly a point where you've gone too far and you're limiting innovation. And in an area that's developing so quickly, doing so could have very harmful effects for both local champions or national champions, but also geopolitics.
Okay, so I'm going to ask all three of you a difficult question. We talked about where AI is impacting specific industries today. What do you think is the next industry or industries that will be disrupted or impacted by AI in let's call it the next year or two?
There's two that pop to the top of my head that I think are more relevant to the consumer base. One is on the kind of customer success side and anything that has to do with servicing consumers. We're seeing innovation in the audio space in terms of not just being able to create individuals who can speak in certain ways, but being able to change accents, being able to develop specific personas, not too dissimilar from what Nat was just speaking about. And then on the other side, in the sports world, we're actually starting to see a lot of innovation there in terms of being able to recreate what's going on the field, the court, the rink, in terms of being able to actually practice in a way that isn't necessarily as demanding, and being able to think through different levels of kind of analytics and strategic scenarios.
The convergence of generative AI and video with entertainment is coming. I had a VC just yesterday talk about a woman that she used to work with. I probably shouldn't name names, but this was one of the original influencers who has 40 years of content in the homekeeping, home decoration space. And they are working on ways to take that content and combine with AI technology effectively have it on demand and available for future generations.
Fascinating, and almost thinks you what is not possible through the use of AI. Justin, anything come to mind?
What I'm looking at in the future, short term, I think there's a lot of industrial automation, the ability to utilize large language models to create more predictive and automated frameworks and basically take a robot and make it think for itself and do different things. And it's forcing people to innovate more on the actual robotic side of things as well. It's accelerating the investment there, which is really exciting. That's probably medium term, and then the long term is the healthcare side. I think we're just starting to scratch the surface as to implementing how to think about drug discovery, drug interactions, things like that. It should be really positive for innovation and for the patients.
For each of you, what is your most contrarian investment thesis when it comes to AI?
The first contrarian take we had on AI was actually that markets like legal tech could be successful venture investments. And we saw that prove out in this current era of AI startups. On kind of this next chapter, this next few years in this area, I think the most important thing will actually not be the technology itself, but how it's delivered and kind of the white glove service that people use at the enterprise level, the customization that happens at the consumer level, and really being thoughtful about the interfaces in which this is delivered as kind of the technology itself becomes democratized.
We absolutely want to invest in venture capitalists who are on top of these AI trends and who are going to be able to find companies benefiting and really driving some of this new innovation. But it needs to be in the context of a well-diversified portfolio. So you'll never see our clients have an entire VC allocation to AI. There will continue to be biotech and life science, although that will have more of an AI flavor, of course, to Justin's point. But it's to stay diversified, stay wary of valuations. Entry prices will always matter. And of course, bet on the innovation, but don't bet the farm.
I think the big guys actually win in this round. I think that there's less innovative disruption because of how expensive it is to deploy AI. And so somebody used the phrase recently, it's a sport of kings to be playing in AI. And so I think the price of admission is high enough that there may very well be more staying power for some of the legacy technology players in particular.
To put everything that we talked about together today, we'll wrap up with, I think, the number one question for investors, which is how should they position themselves as it relates to AI being a part of their portfolio, and what are the attractive areas that we should be thinking about?
I think one of the ways that we think about our portfolio construction is that we don't want any companies in our portfolio that aren't thinking about this. If you're not thinking about how you can use this tool to better drive results in your business, that's at your own peril. So anyone who is proving that they are sitting there with their head in the sand, it's something that we almost want a negative filter on that as a key component. That being said, I think there are leaders that are embracing it and innovating across all sectors, and we should be building a portfolio with exposure to that.
I think a big part of the way you look at companies today, whether it's in the private or public markets, is to think about what other competitive advantages they have. How else are they going to defend themselves, assuming that this technology continues to move in a more democratized fashion, becomes more wide-reaching, and becomes more available to a lot of the players and competitors out there.
Diversifying a portfolio into businesses that include AI native, AI enabled companies. I think you have to look at how those companies are spending the dollars that are going onto their balance sheets and thinking about the ROI for your investment.
I want to thank Justin, Mike, and Nat for sharing their great perspectives on AI. In general, we covered a tremendous amount of ground. If you're curious about more information on AI or any of Cerity Partners' services, please reach out to your advisor, or please go to ceritypartners.com.